you're brand new to trading and you're wondering what tools should I use, what broker should I use, what instruments should I trade, am I a day trader, swing trader or scalper? All of these questions we're going to answer in today's video to give you a comprehensive understanding of where to get started if you're brand new to trading. So let's get into it. So right off the bat, there are a couple of things you can trade. You can trade stocks, you can trade forex, you can trade commodities, and you can trade indices. There's a key difference between them. Stocks, everyone knows, stock market, Nvidia, Apple, these kind of large US tech stocks, brilliant to trade, easy to trade, more used for investing, but you can also trade them on leverage if needed as well. A good broker for that would be something like IG, where you have over 16,000 stocks you can trade. So if you're looking at and interested in trading stocks, I'd probably head over to IG using the link in the description. You can also trade forex. Forex is a volatile market. It is the currency exchange market. Key brokers there would be Pepperstone, IG, CMC, and others. They're very good brokers if you're looking to trade the forex market. They're very low fees. The lowest fees that I've seen are actually on Pepperstone's Razor account and Vantage's Raw ECN account. They're commission based, so they're not variable spreads, and we'll get into what that means later. But they're very good brokers to check out if you're interested in trading currency markets. If you're looking at trading indices, there are a couple of options. You have the FTSE 100 if you're here in the UK. You have the DAX, which is the German exchange. You have the NASDAQ. You have the Dow Jones. These are large indices. I actually got started when I first started trading indices because I could read the charts much clearer, and generally at the time they were trending upwards, so it was a much easier thing for me to get started when I started trading. So you might want to look at indices if you're a beginner. Dow Jones, S&P, they're very highly traded, quite liquid, so it means that you can actually start trading relatively cheaply because it's very similar to investing when you're trading indices. Commodities, these are things like gold, silver, platinum. They're extremely volatile markets, and they actually connect to some currency pairs. So for example, the Australian dollar is actually very correlated to the gold market because the Australian market actually mines for a lot of the gold, so you'll see them kind of moving in tandem. But gold is one of those pairs that has a reputation online. It's very volatile. It's probably not for beginners, and you would lose your shirt if you started trading gold as a beginner. So I wouldn't recommend trading gold in the commodity markets. I'd start with something a lot simpler, like maybe a stock or maybe an indices. That is a much easier way for a beginner to get started. Ultimately, what you pick is dependent on your personality and what kind of trader you are, but also it's depending on your trading style, which we'll get into later in the video. So there's scalping, day trading, position trading, and swing trading, and each of those different types of trading actually impact what you trade as well. There's differences there and nuances there that we actually go into in tradingbrokers.co.uk. If you want to head over there, we have a quiz that helps you find the broker that's made for you based on your different style of trading. Or you can head over to lotsizecalculator.co.uk and enter your trade, and we'll actually determine which broker is best for you as well over there. I would start with TradingView. This is an essential. You'll hear about it a lot within the trading community. People use TradingView for active charting, and some people use it for trading. Now, what this means is that you have a charting platform and you have a broker. The broker plugs into the charting platform. In this case, it's TradingView, but in other cases, it could be something like MetaTrader or CTrader, and the broker is essentially executing your trades. If you go to TradingView in the UK, prices start at £12.95 and they go all the way up to £200 a month. If you're a beginner trader, you're probably just going to start on the £12.95 plan. This is the easiest plan. It's called the Essentials plan. Prices may differ at the time of kind of recording or when you actually use this, but £12.95 should be enough to get you started. You're going to get a few indicators. You're going to get the charts. 2 charts I think you can have. It's a very useful thing to have, to just open the chart, look at the price and start trading. People often ask, why should I use TradingView? My broker actually just has a platform, it has a chart in it, I can actually use it and start trading there. I don't need TradingView. Often that's the case. You may not need TradingView. You could just open your broker's platform if you find it easy to use. But TradingView is really used for indicators, it's used for drawing lines on the chart, trend lines, support and resistance lines. And the indicator library actually means that you can overlay your charts with indicators that other traders have made to help you kind of get started trading. So you'll get a library of information and different charting tools to help you actually view the charts and visualize the charts. On your broker's platform, they won't have this kind of information. They'll have kind of standard trend lines, support and resistance lines, things like that. The TradingView is actually something that's very, very useful to actually start planning your entries and your trading strategy. So it's very, very useful for beginner traders. Another tool that I would look at is Notion. Notion is great at being able to note down all of your different trades, entries, exits, what time you took it, on what time frame. Essentially, as a beginner, you're going to be doing trial and error a lot. You're going to be testing your strategy. You're going to be understanding whether that worked, how that worked, and what the benefit of trading that was. There are different trading journals that you can use, but honestly, Notion is more than enough. You just open a table in Notion and you start writing down all of the trades that you took. Ideally, you don't want to be trading on too low of a time frame, otherwise you're just really trading noise. So I would look to note this down on the 1 hour or 4 hour time frames. Look at the bigger time frames initially, because that's going to give you more clarity on what you're trading and what's actually working. If you're trading the 5 minute or 1 minute time frame, often you're going to get noise and you're not going to get as comprehensive or clarity as you would when you're trading the higher time frames. So trade on the larger time frames, write them down in Notion and track your trades. When you start trading, you're also going to hear a difference between fundamental traders and technical traders. Technical traders are often those who trade indicators, they trade the chart, they trade price action, they trade support and resistance lines. This means that they purely trade from the chart and they look at different indicators to make their trading decisions. You also have fundamental traders. So fundamental traders trade from news, economics, and they look a bit deeper into the price and they understand whether something is high or low based on the economics and the demand for that stock or that particular forex pair. So you're going to need another tool if you're a fundamental trader, and this is Trading Economics. Trading Economics is a website. You can go there and you look at all the different fundamental events that are happening for different currencies that have effects on both stock prices as well as forex pair prices. Or you can have a look at Market Watch or My FX Book. There's a lot of different websites out there that actually offer this kind of news and economics based trading information that you can use as a retail trader to understand what might happen to the price and what the price is currently doing. So these are very useful tools for beginner traders. So in summary, our top 3 tools are TradingView for charting. You're going to need that if you want to add indicators to your charts that are either community based or you've created your own. You can also create a strategy from this, and you can also plug in your broker. We'll get into the broker side of things in a little bit, but you can plug in your broker into TradingView and you can actually trade directly from TradingView, which is a very useful thing to have. You also need Notion. Notion is to log and track your trades. You can use Notion AI to actually summarize and give you an understanding of how you're doing and how your performance is and where you might be lacking. So it's an extremely useful tool. And number 3, you will need Trading Economics or some kind of fundamental news-based site where you can track different key events that are happening in the forex market or the stock market, depending on what you're trading. Now, in general, there are 4 main types of trader, and these are different trading buckets that you'll fall into depending on what kind of pair you trade or what stock you trade and how frequently you trade. They're really related to the different time frames. So for example, there's a scalper, a day trader, a swing trader, and a position trader. A scalper usually trades on the 1 to 15 minute time frame. This is a very short trading time frame. This means that they take advantage of short-term movements in the market. They want to be in and out of trades very quickly. This is in order to profit from, let's say, a news-based event or even just volatility in the market. So they're looking to get in and out of their trades really quickly. The second type of trader is a day trader. They often trade on the 1 and 4 hour time frames. It could vary. They could also go down to the 15 minute, and they could also trade on the daily time frames. But what they're doing often is they're looking across a wider set of pairs to trade, because often their one pair that they choose will not have enough volatility for the day. So they have to look at a larger group of different instruments to trade. And then when they're trading that, they'll make sure that their entries and their exits are well defined. They'll hold it for a bit longer, maybe several hours, but they'll try to close the trade at the end of the day, hence the name day trader. So they're going to take that position and they're going to leave with that position at the end of the day, close out, done. The third type of trader is a swing trader. A swing trader often holds for multiple days. So they'll trade the 1 hour, 4 hour and daily time frames. They'll look more fundamentally. So they'll zoom out and look at the market. They'll look at trading economics. They'll look at Market Watch, and they'll make sure that they know what's happening in the market, both from a fundamental perspective and also from a charting price action perspective, so that they can trade accurately. And the fourth type of trader, a position trader, is someone who takes longer term positions. They'll look at daily, weekly and monthly charts. So they'll hold their trades for 3 months, 4 months, sometimes even a year, And that's a position trade. That's something that they want to hold, and it's more like investing, but really it kind of is investing with leverage. So essentially what they're doing is they're taking out a much bigger position size on something that they think has positive benefit, and they'll hold that for a longer period of time. Often position trading is done within institutions. Retail traders can do it, but there's a lot of different volatility, there's a lot of different margin requirements, so you have to be very careful when you're holding a large position in a leveraged stockbroker or forex broker, because often you'll hit certain requirements to actually keep that position going. So you have to be very careful there. So what kind of trader are you? If you want to be someone who's in and out of the market very quickly, then that is a scalping position. You want to take the 1 minute to 15 minute time frames and trade that. Often beginners get confused. They want to be a scalper because they don't want to be in the position for very long, but on those 1 to 15 minute time frames, you're going to be getting a lot of noise, so you're going to be failing a lot more. This leads to frustration, and often beginners quit because they say, well, I'm not very good at trading, I don't know how to do it, these 1 and 5 minute time frames, it's just confusing me, I'm not going to do it anymore, and they stop. So what I would suggest is that you trade the 1 and 4 hour timeframes like a day trader, and start trading smaller sizes so that you can then test out the market, see how your strategy performs on longer timeframes, and then ultimately move down to the 1 to 15 minute time frame if needed. But essentially that is a scalping position. You're trading much quicker, trying to go in and out very quickly. So if you're more attracted to looking across multiple different things to trade, so stocks and forex and different kinds of commodities, then you might be a day trader. If your kind of attention is a little bit divided often, and you see an opportunity and you want to take that opportunity, but you also don't want to be in the market for too long, then often that is more of a day trader mentality. So you'll take that position, you'll be out of the position by the end of the day, and that's kind of similar to scalping, but also across more positions generally. If you're a little bit nervous about what your position might do at the end of the day, then generally you're going to be a swing trader. You want to hold that position over multiple days. It could be through confidence, or it could be through insecurity. Often people go into this and they end up swing trading by accident. They hold their position for longer than they need to. Often it's in the profit and they're very happy, and then it goes against them. So you have to be very careful if you're a swing trader to take your profits and cut your losses. Don't hold on to your positions out of fear, or turn yourself into a swing trader by saying, oh, well, I'm going to hold that position for a bit longer. That's often a beginner mistake. And lastly, as a position trader, this is someone who is used to more investing, but is now essentially investing with leverage. As I said, it's a very difficult thing to do and to pull off successfully. Position trading really is only really done on stocks. Forex, commodities, and crypto, of course, is often more volatile, meaning that you'll often be in the red and you won't be able to take that position trade, because often the market will go sideways and then you won't be able to actually exit at a profit. So next we're getting to what kind of broker is best for these 4 different types of trader. Common mistake that I see a lot of beginner traders make is that they sign up to a broker purely based on the advertising. So eToro, AJ Bell, Trading 212, Plus 500. These are large investing and trading platforms, but they combine both. They combine both investing and trading, and they make a lot of money doing it. The reason that they do it is often that their spreads are a lot wider than brokers who focus purely on trading. So if you sign up with an IG or a CMC, you're going to get much tighter spreads, meaning your fees are going to be lower if you're actively trading rather than investing. You might be a long-term investor, but a very short-term trader. And the difference there is really important for you to understand, so that you can then sign up with the right broker based on your trading style. If you're looking at scalping, you're going to need a broker that gives you tight spreads. Spreads are the way that a broker charges you. Essentially, when you enter or exit a position, you're going to see that you're at a profit or a loss. This is not just down to volatility, this is also the spread cost. So you're going to be paying the broker essentially to trade. What you need is a Razor account or a raw ECN account. There are 2 brokers that offer this, Pepperstone and Vantage Markets. These are fantastic for scalpers. They're commission based. What this means, and we're told a lot in the news and by advertising, that commission is bad. Essentially, if you're an active trader and you trade a lot, And on these smaller time frames, you don't want variable spreads. Variable spreads are essentially going to eat into your profit. It means that the broker will charge you based on the liquidity in the market. They won't charge you a fixed cost. What you need as a scalper is fixed costs so that you know your entry price, you know your exit price. Often this is from both brokers around £2. So ultimately you'll be paying like £4 for the trade, which is very, very good, especially if you're trading in less volatile markets like London. If you're trading the London Open all the way to maybe the US Open, the spreads aren't going to be the tightest. So you're going to want to get something that is a fixed cost broker. So that would be a Pepperstone or Advantage Markets. If you're a day trader, you're going to need a wider range of instruments to trade. This is where you hear of the big boy brokers. So you hear of IG and CMC and Interactive Brokers. They're three massive brokers here in the UK, and they're popular for a reason. They also offer SIPs and ISAs and a whole range of other things. They have great charting platforms. You can use this as well if you're a scalper, but ultimately your fees are going to be higher than what you would pay if you were using a Pepperstone or Advantage Markets. So these brokers excel at different things. You have to be aware of what they're good at in order for you to actually be successful and profitable as a trader. And that's essentially why people choose different brokers. If you're wondering what kind of trader you are and you want to find a broker that's perfect for your trading style, you can head over to tradingbrokers.co.uk, where we have a full quiz that ultimately gives you the broker based on your preferences, like mobile trading, you're scalping, you're a beginner. All of this kind of information is put in, and then we customize the answer and the broker for you based on your preferences. So head over to tradingbrokers.co.uk now if you actually want to find your exact broker and start trading today. So there's one more thing you're going to need as a beginner trader, and that is trader education. You're going to need to learn. Now, there's a lot of people out there who will give you false information, who will claim to give you advice. I would ignore all of that. I would start by looking at the broker education offerings themselves. So head over to IG Academy. That is probably the best place to start learning how to trade, both fundamentally and technically. This is the most comprehensive broker resource that we've found. There's also other free resources like Baby Pips, which is an American-based company. And there's a couple of other online resources. If you just type in best trader education, you'll find them. But I would forego most of that, and I would go towards the broker education sections. They're not there to trick you. They're genuinely there to give fundamental advice to traders just starting out. I would watch some videos and webinars from IG Academy, and I'll put a link in the description for those who are looking for more educational materials to start. But there's so many out there. You have to be very wary about what kind of information you get and you consume. I wouldn't take any information on anything that tells you how to trade. I would just take information on what trading is and then what kind of indicators you might need, but I wouldn't take any advice on anything that is, this is how you trade, this is how I made this much money. That's just all nonsense. Just ignore it all, focus on your trading strategy, and head over to those broker websites that are going to give you fundamental information, and actually test it out yourself with a demo account or a live account and see what works for you. Let's quickly go through some common trading terms that you might hear when you first start out. Firstly, you're going to hear about lot size. Your lot size is essentially how much you're trading. So essentially one lot is 100,000 of a particular currency if you're trading forex pairs. So if it says GBP USD, you're using British pounds to buy US dollars. You're buying 100,000 US dollars. That is the quote currency. The base currency is the GBP. So you're buying it in GBP and you're hoping that the US dollar will rise against the Great British Pound. That is essentially what trading is, and that's what it looks like within forex trading. In order to calculate your lot size, you can use a lot size calculator. We recommend lotsizecalculator.co.uk. It's one of the best ones for UK based traders. They also have a broker matching tool there as well. So based on whatever time frame you put in and your lot size and your experience level, they will also give you a broker. So I'd check out lotsizecalculator.co.uk. Great website to use for beginner traders. You're also going to hear about pip movement, PIP. So a pip is essentially 0.001 of a currency. So you'll see on the side of a chart, it will say 1.2382. If it goes to 283, then that is a 1 pip movement. Essentially that could represent £1 or £10 in movement depending on your lot size. So that is how lot sizing correlates to pip movement, and you're going to hear that quite a lot once you get into trading. If you have any more comments or questions about what kind of broker is right for you, you can head over to tradingbrokers.co.uk, or if you'd like me to explain any additional trading terms, then just leave a comment or check out our description. Thank you very much.